Very good afternoon. You're watching Your Stocks in the Mumbai News Studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a session where we've given up a lot from the day's high for the Nifty as well as for the mid-cap index. So case in point would be the Nifty, which where the high was around 25,482, record highs for the markets. But since then, we've given up around 140 odd points from the day's high. As of now, currently around 25,339 is currently where the Nifty is at. The mid-cap index too has shown quite a reversal today. So currently down around 0.8%. And we have the Bank Nifty, which is the key one which is standing out today on the gaining side. So we have the Bank Nifty, which is up around a cool 580 odd points. So that seems to be the trend for the markets. Maybe a lot of caution ahead of that Fed meet and whether they go front-loaded with a 50 basis points cut. Hi, Vinny.
Hi, Ekta. Good afternoon. Surely an interesting day that's panning out on the market specifically as well. So, yes, we'll be keeping an eye out on that. Today, Nifty IT, that's clearly under pressure. So, Infosys, HCL Tech, those are seeing some bit of a sharper fall. We do have Reliance Industries, the heavyweight, also falling in trade and leading the decline, especially for the Nifty 50 today. And let's pull up some of the pharma names like Abbott India, Biocon, all of them too under pressure. So Nifty Pharma also among the top sectoral losers, Ekta, that we're seeing coming in.
Yes,
today.
absolutely. The Nifty IT index is not doing too well in today's trading session. There are select stocks within the pharmaceutical space which are showing some amount of traction, but we do have a lot of queries in the next 30 odd minutes. So let's get going on that. We have Rajat Bose joining in on the technicals, Parthiv Shah who's joining in to talk about the fundamentals. Rajat as well as Parthiv, welcome to the show. Well, just before we kick off in terms of the queries, Rajat wanted your thoughts in terms of what you saw for the markets today, the kind of reversal in trend.
Good afternoon, Ekta, and good afternoon. I don't know her name.
Vinny.
Your co-anchor, Vinny. Okay. Well, good afternoon, Vinny, and also good afternoon to Parthiv. What I would like to say about the Nifty is that it is too early to call it a reverse. It is sort of the knee-jerk reaction that you see, because you see at the moment Nifty is only 0.28% lower, and the movement, if you see, it is more like a sideways trading that is seen in the Nifty. Bank Nifty, of course, stands out with a 600-point gain, but there also I would say that it is a mixed bag. If you look at ICICI Bank and HDFC Bank, they are really doing well. But if you once you go into say, apart from that, I found that Bandhan Bank is doing really well. But there are PSU banks, there are other, even Kotak Bank for that matter. They are not showing that much traction as such. So it's even Stevens, yes. Standout winners, you would say that things like, stocks like Alkyl Amine or say Fine Organics, of course, they were doing much better in the earlier part of the day. Mm-hmm. Now they have also lost ground for a bit. Overall, I would say that don't get too upset unless, of course, there is some major selling in some pockets. Although Reliance is not doing so well, maybe that is the reason why you are not seeing Nifty getting traction. Overall, Bank Nifty is showing some traction. Nifty is sideways.
Right. Okay. That's the view coming in on the markets. Good afternoon, Rajat, as well as Parthiv. Parthiv, let's start with the first query with you, because this one is coming in for Bajaj Housing, and the viewer here is Arun Shastri from Mumbai, who's holding 1,000 shares of Bajaj Housing at a price of 157 rupees per share. Wants to know whether the Bajaj stock can become like Bajaj Finance in the next several years. What is the word coming in for Bajaj Housing? Obviously, the recent one that has made the list on the D Street debut.
Good afternoon, everyone. Actually, after a stellar listing, if the IPO price had come at $70 in terms of price to book multiple, quoting at somewhere around 2.7 times FY26 basis. This is after the funds that they received from the IPO proceeds. And now post-listing and the price at which the gentleman is bought, we are talking of valuations of almost 6 times FY26 price to book multiple. And looking at the growth trajectory of this company, I think they've done stupendously well in terms of growing their AUM to the tune of 28% compounded over the last 4 years, despite the blips during COVID. Not only that, I think in terms of capital adequacy, the company is extremely well paced. And more importantly, I think they seem to be confident with their body language that such growth trajectory would be sustainable going ahead. Plus, they have one of the lowest cost of funds because of the AAA rated balance sheet. And the credit cost is also one of the lowest in terms of the peer sets as well. And historically, if you see, I think the Bajaj Group, especially Bajaj Finance, has always quoted the premium. And similar premium valuations are kind of attributed even to Bajaj Housing Finance. Our sense is the stock might consolidate for some time. I think the market would like to see upcoming 2 quarterly results post the IPO listing and see how the growth trajectory is, how the management call commentary pans out. And then I think the next leg of growth will start. But I have no doubt, even if the investor is willing to hold from these valuations over the next 5 years, this can really compound wealth. I think it's a fantastic franchisee. And still, in terms of the mortgage penetration as a percentage to GDP, India is still at 9%. Vis-a-vis a lot of mature developed countries where I think the penetration is as high as 60-70%. So long way to go.
Okay, all right. That fundamental point is taken. Obviously, you wouldn't have data on the technicals, Rajat, at this point, but the comparison is with Bajaj Finance. So wanted your thoughts on the technicals of Bajaj Finance. The stock is doing well today, but it's had a lackluster year. There have been concerns about competition seeping in. What is your sense in terms of Bajaj Finance, the technicals there?
Well, before that, I would like to give a small assessment about how Bajaj Home Finance is doing. See, the kind of movement that is there. If you look at the Bajaj Finance from daily point of view, technical analysts like me would be bereft of data. But if you look at 5-minute chart and things like that, there is enough data already there. So based on that, 164 to about 161 is the key support area, at least in last 3 sessions. What I would say is that unless 160 is taken out decisively, Bajaj Home Finance doesn't look that bad. Regarding Bajaj Finance, what I would say is that this is an old warhorse and it has moved up quite a bit, but it has actually reached the resistance levels. Only when 76.80 is decisively taken out, there would be further upswing. I would say Bajaj Finance is a great shadow. As per Financial Times, it is called a shadow bank kind of entity, and this looks pretty good. So any Bajaj Finance shareholder should continue to hold on to their position unless it falls below 74.80, which is the 200-day exponential moving average, at least on the shorter term chart.
Right. Rajat, I'm going to come back to you. This query is coming in for Tata Motors, and the viewer Pranav is from Mumbai is holding 30 shares of Tata Motors at a price of 800 rupees per share. Should they continue to hold this or maybe look to book out their profits, given that the stock has seen a bit of a correction in the last 1 month specifically?
See, from the levels of about 1150 plus, in fact, the high was 1179 recorded on 30th of July. Now we have come very close to the 200-day exponential moving average, which is at 933 as we discussed the stock. Now, what I would like to say is this, that when a major stock like Tata Motors tests its 200-day moving average over several months, even internationally, even in other markets, in our market, institutions come in to buy. So I wouldn't suggest that you get out at these points. Bounce, if it fails to take out 1050, then seek an exit to hold it with a stop below 900.
Okay, all right. That's on Tata Motors. The fundamentals, would you have a view, Parthiv? Tamu?
See, I think short to medium term, I think it could be a struggle for Tata Motors, especially attributing to the fact from the last con call, management did allude to the fact that the global demand for the luxury cars seems to be kind of tapping down. And more importantly, I think much of the valuations that Tata Motors gets is thanks to the fact that the JLR platform was doing extremely well for them. No doubt, I think it's still a good runway ahead for them in terms of the pipeline that they have in the luxury car market. But with the global slowing down, I think that could impact the short to medium term trend for this company. But I think for a longer horizon, we are very upbeat because despite the recent correction that we witnessed in the stock, I think the valuations are still comforting and the domestic portfolio is also firing on all cylinders. They might like kind of further unlock value in the EV segment, and the CV segment, the commercial vehicle segment is steady state right now. So overall, I think all the verticals are doing well for the company, but on any further declines, I think then only we would suggest further add to this company for a longer horizon.
Okay, all right. So that's on Tata Motors. The stock, as you can see, is given returns of over 50% in the past 1 year. We now have Ritu, who writes to us from Noida. She holds 15 shares of Wipro, which she's bought at around 500 rupees per share. So she's just about flattish with a positive bias. She wants to know what to do, whether to buy more or to exit. Well, it's a day where this query comes where the IT index itself is in a difficult situation. That is simply because of profit taking as well as trepidation ahead of the FOMC decision, and not to mention that Accenture has delayed bulk of their promotions by 6 months on account of their outlook. But on the other hand, we have Wipro, which did announce around 8% hikes for salary hikes for their top performing employees in 2024. So, each company is probably differing a little bit on its outlook at this point. But in any case, what's your sense on this, Parthiv?
See, not very upbeat on Wipro, Ekta, because historically, if you see, Wipro has spent in a lot of their cash flow generation into inorganic acquisitions. And whenever one monitors the organic growth and the inorganic growth that Wipro has given, it is, I think, on an average been subpar and below the industry average growth, below the NASSCOM kind of commentary growth. And when there are peers like Infosys, TCS, in terms of constant currency growth, in terms of the total contract value deal pipeline, and in terms of the client mining, I think they have fetched far, far superior. And our sense is that at current juncture, I think over Wipro, I would still prefer Infosys. I think the commentary was pretty robust, and more importantly, I think the management's body language in terms of the new products that they are eyeing, especially in the generative AI, looks very encouraging. And our sense is that I think Infosys still has a slight valuation discount to that of TCS, and there is some catch-up to be played. But overall, I think we would prefer Infosys over Wipro.
Okay. That's the word coming in on the IT side. But on that note, we're going to slip into a very short break. But viewers, don't go anywhere because we'll be back with more of the stock-related queries after the break. Welcome back to Your Stocks on CNBC TV18. We still have with us our experts, Rajat Bose as well as Parthiv Shah, to answer all your stock-related queries. Parthiv, this next query is a long-term query coming in from Mr. Ramakant from Maharashtra. He's holding 30 shares of HAL at a price of 3,872 rupees per share. While obviously in the last 1 year, we've seen, these defense names clearly see a very sharp run up. What is the view on this one for the next 5 years? Should the viewer continue to hold this or maybe book out their profits?
See, I'm so glad to hear you're talking about a 5-year view vis-a-vis a 5-month view in a stock like HAL and most of the PSU defense stocks where the valuation run-up has been far higher as compared to the current fundamentals. But talking about HAL, I think if one has such a long horizon, even from here and especially post the recent retracement from its all-time highs, I think the stock is attractive. One of the reasons being, I think, in terms of the aircraft jets that HAL has in terms of the capability, the technology, none other peer has in the country. And I think going ahead, the way government is looking to up the defense budget and more allocations coming here, HAL's order book, I think, should go up further. And more importantly, I think government is also looking at a lot of technological tie-ups for such defense companies. And HAL has been successful in such tie-ups, and especially in terms of even the helicopter manufacturing. The capacities are huge for this company, and I think their execution track record so far has been pretty good. Going ahead, we expect, I think, more order inflows. And with the 5-year view, I think I have no doubt that HAL looks good as a portfolio growth for now.
Okay, all right. But on the technicals, all of these defense stocks have obviously rallied significantly. But in particular, Rajat, how does HAL look to you?
Technicals are not suggesting that anything great at the moment. I'm looking at not the daily chart, but the weekly chart, even monthly chart. There is a parabolic formation. And I do agree with the assessment that Parthiv had about HAL fundamentally. But the point is that how much of it is in the price? Because whenever there is a parabolic rise, and that means within a very short period of time you rise so much, what happens is that there would be a phase when this stock either would be moving sideways or will seek a correction that will be in some cases 50% of the total rise. So if one has a 5-year horizon, even I would say you continue to hold it. But otherwise, I would say that this stock is pretty much liquid.
Okay, all right. So that's on Hindustan Aeronautics. But we now have a query coming in on Ola Electric. Ruthvi Jain writes to us from Surat, holds 200 shares of the stock, which he's purchased at 142. So sitting on a loss, and she wants to know what to do, whether she should hold or sell. Well, we're talking about 5-year perspectives here, Parthiv. So I wanted your thoughts in terms of how you would approach Ola Electric. Sitting on a loss currently, but do you think that that's probably going to even out? And what would your approach be?
This is a very tricky question, Ekta, and as you've also been tracking, I think Ola, despite I think lackluster IPO participation, had a blockbuster listing post the IPO. And I think a lot of market participants believe that this is a company which can do things differently as compared to a lot of their other peers. And I think the management has been very upbeat on the fact that their backward integration strategy, which is, I think, the battery manufacturing, the gigafactory, a lot of capex is happening there, should eventually help them to kind of become, a very profitable company. The reason being that battery cost in the EV two-wheeler space, and now that they've also launched bikes since 15th August, where I think so far the initial trend suggests that the demands have been very good. If at all, I think they can do something good in terms of the battery technology and reduce the cost, then probably such elevated valuations are justified. But my sense is I think it's better to wait and watch. I think it's prohibitively expensive in terms of valuations right now. And I would prefer a major correction in this counter before entering it even for the long term.
Okay, you would expect a bit of a correction on this counter, Ola Electric. Rajat, I know it's a recently listed company, but anything in terms of a view for Ola Electric, what are you looking at it right now?
I think it had a low of 95 and thereafter it went up quite a bit, I think close to about 160, 157. After that, it had given a major correction and it tested levels close to 100, now trading at 117. If one has already invested, then I would suggest to continue to hold on with a stop below 95 because, yes, it had a stellar listing and stellar listings are a dangerous ballgame because they retrace most of the gains that they show. The Nykaa, the Tata Technologies, they are cases in point. Similarly, Ola Electric is that. But at current prices, I would suggest one should continue to hold on with a stop below 95. And on the upside, once it crosses 130, then there could be fresh traction in this.
Okay, all right. Well, we now have Preeti, who writes to us from Patna, holds 20 shares of BEL, which is at 180. She wants to know whether to hold or sell at this point in time. She's sitting on a marginal profit at this point, but that's because of the quantity being less. But in any case, Rajat, your view on this?
You're talking about Bharat Electronics, right?
Yes, another stock from the PSU space which has seen a good upside.
Yeah, that good upside is another case of parabolic rise. This is now in an intermediate downtrend, and the downtrend is not showing any sign of abating. So what I would feel is that either you hold it with a stop below 240, or you get out at current prices, because immediately I don't see Bharat Electronics jumping back to its 340 high anytime soon, or even 300 levels. It needs quite a bit of consolidation because it had a stellar run. At 120, it was a great stock. At 282 or 340, it's a great company, but not a great stock.
Right, surely keeping an eye on those levels over there for BEL. But that was the last query for today. So thank you so much, Rajat, as well as Parthiv, for joining in with us on the show, as well as solving all the viewers' stock-related queries. But with that, viewers, we are absolutely out of time on this edition of Your Stocks. It's a goodbye from Ekta, myself, as well as the team who put this show together. But do remember, you can always email us your queries, and we'll address them with our experts. Stay tuned in for Closing Bell up next.